Hello financial investors and welcome back to the channel. My name is Brent and today we are going to be doing our Monday buys here on the 20th of April 2020. We're going to go ahead and take a quick look at stock futures up on the screen. Then we're going to go ahead and dive into the M1 Finance platform, take a look for the week performance from the 13th to the 17th. Take a look at what stocks were up, what stocks were down, the overall performance here for the portfolio for last week, which stocks paid out dividends, which are going to be reinvested here on the 20th, that compounding effect of using dividends to buy back more shares, which increase future dividend potential. So a lot of that is currently going on in the portfolio. I do plan to buy 4 companies today. We will go ahead and discuss these 4 companies in the current short term, along with some of my other positions that I plan to average into and continue to dollar cost average into the future. So if you are brand new to my channel, have not yet subscribed, would really appreciate if you do head down below, subscribe to this channel. If you do enjoy this video, find it helpful, give this video a thumbs up right now. That way you don't forget later on. And of course, if you have any comments or questions at any time during the video or just want to ask a general question, drop it below. I do read and reply to all your comments. And let's go ahead and get into the video. Okay, so stock future right now are getting pretty slumpy right now, but already we are just 11% from being positive year to date. Even with the economy currently in shutdown mode, small business, mid-sized businesses, large businesses, many of them are not currently open here within the United States and all around the world, affecting not only the economy, but the financial markets as well. Now, the economy, there's 22 million individuals out there unemployed currently, whereas the market's not really showing that here. We're just down 11%, whereas just maybe a month ago, we were down at, I believe, 30% year to date. So just within the last month or so, we have recovered nearly 30% off those lows, putting us here at negative 11%. So really wild market these past few weeks and month here in the market. And if we jump over into the M1 Finance portfolio, this is where we are currently sitting now. I don't have as much cash sitting in the account. If you had been watching the past few weeks, I had been pumping about $4,000. You know, we are just midpoint April. That's 4 months now into the year 2020, and we're just about $2,000 off from maxing our Roth IRA for 2020. So we do still have another $2,000 that we can deposit. I will probably continue to dollar cost average my continued amount on a weekly basis unless we fall further or continue to downtrend into the future. Right now, I'm going to go ahead, probably pull back my plan. I'm going to see how much, what I will probably end up doing is I can deposit another $2,000 for 2020. I have X amount of weeks left. So how many weeks are in 2020 left? So if I Google this right here, there are currently, 52 weeks and 2 days. But how many are currently left? So right now there are 36 weeks remaining here in 2020 with $2,000 and some change to continue to invest. So here I am going to eventually change my plan up here. I'm going to adjust my deposits on Friday from $115 to $38 to $55.55. That way I can continue to dollar cost average on a weekly basis. I am able to continue to dollar cost average into the end of 2020 because I'm not sure where the market will kind of go from this point. So I'm going to go ahead and trend that back. If the market does present an opportunity where it falls another 10, 20, 30%, then I may add more equity at that time in a higher amount, finishing off my contributions for 2020. But until that happens, here we are today. So I recently added $115.38, plus we had some companies pay out some dividends last week between the dates of 13th through the 17th of 2020. So if we go ahead and use our handy dandy calculator here that we have up, we can go ahead and take a look at, as of right there, our first dividend payment there of $6.62 and then $4.47 and 16 cents there for Main Street Capital. Not a whole lot, but we should get quite a bit more in the upcoming months. as our Main Street Capital position has been increasing here pretty nice. So there's the 16 cents that we added last, and we're going to go ahead and add the 228, the $10.09 from WP Carey, and then finish it off with the $1.64 from Main Street Capital. So last week we made $25.26 in dividends, along with our current deposit of $115.38, leaves us with $140.64 to invest today here on Monday. Now I am going to be breaking this up into 4 positions, which I already have planned out. I'm going to go ahead and show you that here in just a second. Before that, we're going to go ahead and take a look at the 1 week performance for this portfolio. Now, I do not know how accurate this is kind of showing here. This is showing basically a flat recovery here on the week. So I'm not sure how accurate this is. I would say it's pretty accurate, but I'm pretty sure just a week ago we were quite a bit lower than where we are at currently. If we take a look at the weekly performance here, we can see that our top company here is ABM Industries, up 13.65%, followed by Walmart, Lockheed Martin, Kimberly-Clark, and Johnson & Johnson. Those are our top 5. If we go ahead and swing down towards the bottom, we can go ahead and see that our worst performers here are Tanger Factory Outlet, Simon Property Group, WP Carey, Realty Income, and JP Morgan. So the financials and real estate investment trusts are the worst performing companies within the portfolio, whereas some of the more consumer style companies are up towards the top and doing well in this market. Okay, so we've covered the weekly performance here of the portfolio. We've covered the dividends that have been paid out and some of my upcoming plans here in the future. Next, we're going to go ahead and jump into the spreadsheet as far as what companies I invested in last week, which we can go ahead and check this out as well. The 4 buys we did last week was Pfizer. We put $100 towards Pfizer. We put $100 towards Chevron. $90.64 is what we couldn't. That's all that we had to invest at the time, but I still want to continue to average more into Eaton Vance. And we had $70 in 3M. So here, 3M, $70 at the current moment. I believe that puts 3M exactly where I want it. I don't want to add any more equity currently. It's sitting at about $908 of equity. It is down roughly 18.62% still, but we may have a better opportunity in the future to continue to average into 3M. For now, I'm going to go ahead and put no more equity down towards this one. We also have ABM Industries. We could average into this one as well. It is now positive. It wasn't positive just a few weeks ago, and now it is positive by 28.79. So you can definitely see that within a couple weeks, the market downtrends and uptrends very violently in these individual companies. So 1 week you could have the opportunity of being able to average into it, whereas just another week it would be up nearly 30%. So nothing currently in ABM. AT&T, it's here in negative at the current moment, but it's already gone ex-dividend. It's not a priority here as far as wanting to buy it. I would really like to buy this one down into 20s. If I can get it around 26, 27, that would really help my unit cost of $34.22 really come down. And if we take a look here, Chevron, we put $100 last week into it. That leaves me with $170 left to invest to put it to a point where I want it to hit. Eaton Vance, if we want to, I'm going to go ahead and take out $90.64 from here, so that should put it at $290 and then $289.26, I believe. $289. We'll just say $290. Let's make it easy and round there. I believe that's what I want. Yeah, $290. Okay. So $280 left in Eaton Vance in order to kind of get that one back to where I want it. And Pfizer here, we added $100 last week, so I have $160 left remaining in that position that I want to continue to average into. Now, I did add a couple color codings onto these and kind of sort them by when they go ex-dividend. So I'm going to go ahead and do that here as well. I don't know if you guys also track your portfolio using a spreadsheet of such. This one continues to change as I make improvements or change my portfolio or come up with different plans, so it never stays really fixed for too long. The main pieces stay pretty fixed, but I'm always adjusting some other tiny little piece in order to kind of get this one where I feel pretty comfortable with it. Okay, so now these can be adjusted up, these can be adjusted up, and these can be adjusted up. Okay, so here the 4 companies that I'm planning on buying today is continuing to average into Eaton Vance. This one is going ex-dividend on April 29th. Currently today is the 20th. That leaves me with this week to continue to dollar cost average into it. And then it goes ex-dividend next Wednesday, which leaves me with next Monday to also continue to dollar cost average into it. So Eaton Vance, it's an asset management company. It has been moving up pretty positive here within last week. If we go back into the portfolio, take a look here at last week's activity. If we take a look at the 1 week performance and type in EV here, we'll see that Eaton Vance was about flat. Okay, so it's still positive overall, 0.07. So it's not downtrending. We're just falling through the basement, such as JP Morgan and a lot of the other financials. If you looked at the financials last week as they were reporting, Goldman Sachs, Citibank, Citigroup, Wells Fargo, JP Morgan, they were all wrecked on earnings. So Eaton Vance coming out positive, semi-flat on the week. That's pretty good for Eaton Vance, and they are offering a very low payout ratio of 47.85, nearly 40 years of continued dividend growth, and a nice starting yield of 4.34%. So I am going to continue to target Eaton Vance. We'll go ahead and come up with the amount that I'm going to average into them here. The second one I want to continue to average into is Chevron, major integrated oil and gas. When you think of oil, you generally think of Chevron, Exxon. Those are the big players there in the oil business. So this one is going ex-dividend roughly the 16th of May 2020. It is still a few weeks away, but I just want to continue to average into this one. If we take a look at the position here, it should be up here towards the top. I believe it is, oh, it's a blue, so it'll be down here. Okay, so Chevron should be Chevron right there. So it's down roughly 14.71%. It has $730 of equity and currently offering a 5.92% starting yield. So that is very nice right there. Yeah, I could have just flipped over here. They do have a wonky payout ratio. It's kind of showing incorrectly, but this is showing earnings per share of negative 30 cents. So we'll check this one out in the future, but it does have a long-standing history of growing and paying out dividends. I don't believe they should have any issues with upcoming payouts, but we'll continue to dollar cost average into them. We'll see what the future kind of holds for them. They do have 34 years of continued dividend growth through the past recessions, but what we're currently going through, this instant recession, isn't unlike anything that we've ever came across. So we really don't know what the future will hold for many of these dividend aristocrats through the past history. So I am also going to continue to dollar cost average into Chevron. This one's going ex-dividend there in May. The other one I wanted to continue to dollar cost average into is Walgreens Boots Alliance, ticker symbol WBA. This is drugstores. So they have pharmacies all over the place. I know we have 2 locally here in my city here in Oregon, and I've gone there a few times to get medication for flying overseas. They're generally the only place we can go and get some of the flight sickness stuff. My wife has to take it, or some of my kids, we just get it for the kids as well, just in case we're flying overseas. Sometimes those flights can be very long. We fly back and forth sometimes between Germany and the United States or some other areas overseas. So if you're in planes for a long distance, it can be well worth it to kind of buy those. Anyways, we do go to Walgreens. I enjoy the stores. They're always very clean. The staff is always very helpful. The stores themselves are smaller than those big grocery outlets. So if you need assistance or need help finding something, they're usually there to kind of help you, and they're pretty speedy at it. This one is currently offering a 4.23% starting yield. It has an annualized payout of $1.83, very low payout ratio of 32.84, continued dividend growth for the past 44 years. Plus, when I had done my initial research of this company, their revenue, their net income, their free cash flow, their earnings per share, current PE ratios, everything met the mark of my strategy of what I like to look for in companies that I invest in. So that is the main reason I chose to invest in Walgreens, and not because of how their stores are kind of ran, but that is another nice indicator as well. Now, this one is going ex-dividend on the 17th of May, so it is just a few weeks away. I do have some more opportunities in the future to continue to dollar cost average into it. So I do plan on averaging roughly $250 more into Walgreens Boots Alliance. And we can see here roughly I have $650 of equity currently invested in it. It is down roughly 16.71%. But this is just an opportunity to lower my unit cost, increase my yield on cost, and just continue to accumulate more shares of a great company. And that is the third company. Now, the fourth and final company is Weyco Group, ticker symbol WEYS. This is the textile apparel, footwear, and accessories. A lot of companies, may think that, a lot of investors may think this one is kind of a wonky investment. This one's sort of in the retail business, selling different products and such. They do have a very diverse as far as their selling. They sell within the United States, Canada, Europe, so they are located overseas as well. They do a lot of internet business, so a lot of their sales, if you look at, I'm not sure if this one itself does it, but if you do go to their website, you can order directly off their website. I think they're one of the more higher up businesses that, even though they are currently getting walloped here in the short term, I think that they will continue to do just fine. They're not a Macy's, JCPenney's, or store that needs a physical location to sell. They can sell a lot of their products online. They can sell a lot of their products through Amazon and their own online website portals. So if we do take a look here at Waze, just within this past week, they are down for the 1 week performance there by roughly 2.32%. But just on Friday alone, with the possibility of the whole hope out there that's kind of going on, this one jumped up 6.37%. And they have just been beat up so much in the short term that if I can build this portfolio or the position to a sizable amount, and they do begin to uptrend in the future as other investors are looking at a great company with great products and services, and has been beat up in the short term, but really just needs to kind of come up. I'm looking at the company for the next 5-10 years with a solid history of 38 years of growing and paying out dividends. Their payout ratio, their earnings doesn't display well here, but we will go ahead and continue on with Weyco Group. So that is going to be my fourth and final company that I am choosing to invest in this week. Now, I do want to probably split this up here into ones that are here in the short term, such as Eaton Vance, which is coming up on ex-dividend here in 8 days, and then a few others such as Chevron, Walgreens, Weyco Group, that I just don't they have more time to invest in them. So Eaton Vance is going ex-dividend next Wednesday, whereas everything else is starting to go ex-dividend in May. So Eaton Vance, 8 days away, April 29th. Chevron and Walgreens are both going ex-dividend in the same time, roughly the middle of May, the 16th and the 17th. And then Weyco Group, they do have quite a while still until they go ex-dividend, till the end of May. So I have, let's see here, we have $140.64 to invest. I'm going to go ahead, whoops, that I don't know why that's quite big there. I'm going to go ahead and do that one. So if we split this up, we're going to go ahead and put $70 towards EV, and then the other ones will get the remaining 70 by 3. 70 by 3 puts us at roughly $24 there. So we're going to go ahead and say that roughly $24. I know it's not a lot to average into these positions, But that is what I want to continue to dollar cost average. We also have Johnson & Johnson here that increased their dividend, but we'll probably do that. I'll probably cover that in an upcoming monthly recap. I haven't done them in quite a while. So if you're looking to get an updated monthly recap of the portfolio, we can go ahead and get that done. I really haven't been tracking the progression of the portfolio just because it's been kind of a wonky time. I haven't really watched the portfolio as much on a daily, weekly basis besides these sort of Monday buys. And then I don't spend a whole lot of time really kind of seeing all the red that's kind of going out there unless there's an opportunity. And then I'll just buy that opportunity and just kind of move on. So here's what we're going to do. We're going to do $70 into Eaton Vance, and then we're going to do $24 into the other positions. So EV is the first one. Go ahead and select that, buy, sell. We are going to go ahead and put in $70 and hit continue and confirm. Next, we are going to go ahead and hit done. Go back to the Roth IRA. Go ahead and select Waze, which is right there. Buy, sell. I'm going to put this on at 23 because I know the other ones don't exactly make up 70. They go a little bit over. So I'm going to go 23 there, back to there. We're going to go ahead, not the whole, that's going to buy the whole portfolio, which I do not want. And next we're going to go ahead and go to WBA, Walgreens Boots Alliance. We're going to go ahead here and put 24, confirm buy. And the final one here is going to be Chevron, ticker symbol CVX, and that is right there. And that's going to go ahead and buy, sell. And the remaining dollars of $23.64 is what we're going to have there. And that's going to confirm all of our equity that we currently have in the portfolio is going to be invested in the market here on Monday. So back to our Roth IRA there. And there we go. We have 4 buys upcoming. If we go ahead and view the details, we can see here's all of our positions. We have roughly $70 going into Eaton Vance, $23 going into Waco Group, $24 going into Walgreens Boots Alliance, and $23.64 going into Chevron. So those are the 4 positions that we are going to buy here on Monday. Do you own any of these companies? Eaton Vance, Waco Group, Walgreens, Chevron. Do you think any of them are risky? Have you ever researched them, done a little bit, and looked into either of these companies and decided that they're just not worth investing in? If you have decided that, let me know in the comment section below. Or if you are currently invested in any of these companies, let me know that as well. Let me know what are stocks that you are currently looking at or buying in this upcoming week. Are you continuing to add equity into the market as it has been uptrending, or did you add most of your market as it was downtrending and now you're kind of sitting back and just lowering your dollar cost averaging, your contributions, and just waiting for the next opportunity to add more equity? So let me know what your current plan is. I'd like to kind of hear from all my subscribers, investors, and my viewers. So that is going to be completing today's video. Let me know in the comment section below what's going on with you, and that is going to be it. Thank you all for tuning in. Remember to subscribe, hit the thumbs up button below, and drop me a comment on what's your current outlook here in the market. Thank you for watching. I will see you next time. Bye.